23rd Allendale strategy session. We're going to go ahead and get things kicked off with Rich Nelson and take a look at the fundamentals of the grains. So we'll go ahead and we'll see what he's got to say. Take it away, Rich.
All right, thanks, Steve here. So great news as far as this week's action. We're going to basically sit in our hands for a little while, and we've got a lot of stuff going on here, of course, starting next Monday. But as far as news for us in the right now situation, let's do a small recap as far as the May precip level before we talk about June. And of course, we know back in May we had really central Illinois being the main area, which had some serious problems. If you look at the very far right of this chart, you'll see Jamestown, North Dakota. Of course, all North Dakota was having problems back, and this is, of course, for the month of May as a whole. But as things have changed so far this month, we've got to certainly point out some scaling on the chart. Number one, the scaling as far as the high upper left level here, 12 inches. So we had to change the scaling to make this one work. But not just Minnesota, but certainly in this case Omaha. And as far as the Nebraska rainfall, it's a little more scattered than what it appears as far as Omaha by themselves. But certainly getting a lot of interest, 10 inches so far this month for this area as far as Minnesota and as far as Omaha as well. And this is just a month-to-date number. We still have 7 days left, more or less, to add on top of these. But even if you look at just beyond these main two states, you're of course looking at Wisconsin. You're in the far right here. But everybody else, actually almost everybody else, is right at average. So with only 3 weeks of the month done, we've already got our whole month's normal taken care of for most of the Corn Belt. So we've done a great job in getting a lot of precip taken care of for people who needed precip. And of course, we have maybe a little excess here for portions of Minnesota and such. There is some talk right now. I did hear a couple guys in the office talking about it of some pretty crazy acreage estimates as far as flooding or underwater. Realistically, you're probably looking at 5 to 10% of Midwest being classified as maybe a little too much moisture, maybe too much wetness. So that includes both flooding, standing water, as well as people who are just saying I've got too much. So realistically, about 5 to 10%. Now, as far as the current forecast, though, we all know that this is something which will change here in a second, and we'll talk about that here just after looking at two quick slides. Right now, average guess for this afternoon's crop progress report is for a 2% decline in ratings. That would put corn at 74% good to excellent. And as you can tell on this chart, there's actually a few other years. Now we're kind of bringing our ratings down. This does bring us right in line with many other years. This is still a great year, no doubt about that. But right now we're getting back towards, well, just good year. In fact, we've taken off some of those 79 and 80% comparisons now. So we're bringing ourselves out of the fantastic record crop year to now it looks like we're looking at good so far. This is just as we stand right now. As far as soybean ratings, a 2% decline is expected there as well. Brings them at 71%, good to excellent. And different than corn, though, soybeans are still holding their crown as being what could be the best year ever for soybean ratings. 71 is the only comparison here against 1994, and 1994 was a record crop year for that particular time frame for yields. So we're still in great territory as far as soybean yields go. Now I've got some excess rainfall, and that will be something we've got to look at here. But if we just go back to just Thursday's NOAA report, the monthly update from these guys still showed some fantastic implications for July. And as we know, July makes, number one, the yield setting month of the entire year is July, both temperatures and moisture here. And this is something we talked about many times before, and it's something the USDA now is also jumping on the bandwagon following Allendale's weather research as well. So as far as this goes, normal to below normal temps were forecast for the month of July. This is certainly a very big deal for us here in the Corn Belt. and this gives us potential for record yields still. It's going to be a little harder. It's not going to be as much of a slam dunk as it was just 2 weeks ago. But certainly for right now, we've got to assume we're going to beat USDA's trend yield number. As far as precip, well, we're going to have some people getting a chance to dry out a little bit here. You're not going to see Minnesota ever perfectly corrected. So our guys up in there are not going to be happy for once in the past few years. They've had an unusual situation, and they've had some great yields here in the last couple of years. Now, as far as July, August, September, same story. Still very mild temperatures here, and as far as precip, normal precip for most areas. Maybe North Dakota being a little problem there. But bottom line here, guys, is we've got a great crop still in line, even with our issues regarding weather right now. Well, I should say even with our last week's weather issues here. So as we look ahead towards July, we need to pay attention very closely now to these extended forecasts. Each day's update on the 6 to 10 day, also the 8 to 14 day. These are very big deals for us. This is now when we're going to really start determining yields. So we've got to pay attention very closely to this issue. As far as those states in the South, you're looking at the first 2 weeks, really 2.5 weeks of July, taking care of over half of the pollination in those areas. Once you get in the central areas here, you're looking at Illinois with this red line here, the one which kind of sticks out, because we did have an aggressive planting early on for these southern and central areas here. And that would be the second week of July, really just, I should say, the first full week of July as far as that goes. So a good chunk of Illinois will be taken care of relatively soon. And everybody else in the central areas are looking at really that third week of July for the main part of their pollination. And of course, the north, you're looking at the very last part of July, if not actually the early August. So some problems remaining as far as that goes. Now, we've got 2 reports coming up on Monday. Very big deal for us. Number one is called the grain stocks report. This is different than what we call ending stocks, which is the monthly revision. But grain stocks, as I said, separate reports, not called ending stocks. In this case, this is only a count of what's left over of last fall's harvest at the end of May. Actually, they call it June 1st. So there will be no supply-demand numbers in there. It's just saying, here's what we have left over as of June 1, and let's look at it compared with March 1. So they don't tell us how we got there. But in this case, because we know a good chunk of demand, we shouldn't have a lot of surprises, but theoretically, we can throw theory out the window because we usually get surprises on this report. And during this week, we'll also release those updates as far as the price action studies and get a lot of that stuff going this week as well. Now, as far as quarterly grain stocks, remember back on March, we had a lot of corn still on hand over last year. Last year we had 5.4, and as of March 1, this year we've got 7 billion bushels. So it's still going to show a pretty good sized corn number. But the real question will be soybeans. Keep in mind, back in as recent as March, we were already below last year's numbers. Based on our demand, we're certainly going to be under now last year pretty well. And this will remind the trade, certainly for old crop at least, that it's going to be very hard for us not to beat USDA's estimates on demand for soybeans. So this is going to remind the trade that old crop beans are still very tight. Now the other report, there are 2 separate reports, is of course the planted acreage report. Theoretically, this is a survey-based analysis. For the bulk of their numbers, USDA does not give any of their personal feelings. This is simply a farmer survey. I did make that second line here pointing out that as far as the survey goes, USDA does make some assumptions because as of June 1st, there's still acreage not planted yet. So they will make some assumptions on what gets planted for that portion. For what's not planted, they'll make some assumptions on their own. And of course, they'll make assumptions on harvested acreage here. What I do want to point out is, as we said before, if you look at this chart as far as the March to June changes on acreage, look at the past few delayed planting years as far as corn. We got 5 that we're looking at, in each of those 5 years, corn acres increased. So saying that again, corn acres increased in each of the past 5 late planted years. So there's a lot of people saying, well, lower corn and more beans. It could be same corn and more beans. It could be more corn and more beans at the same time, which is something we've been talking about for quite some time. As far as soybeans, well, the idea right now is higher acreage. Well, in each of the past 5 late planted years, which are the dark bars here, only 2 of them had higher acreage. So this idea that planting pace determines how many acres goes in, throw it out the window. It's not important. And what's more important is price being a very big issue for us as far as that goes. If we offer the price, farmers will get it in no matter what the conditions are. That's what we've learned in each of these past years. But as far as the trade expectation, we have no problem at all with saying 1 to 3 million extra acres thrown into the mix here, and certainly a lot to talk about for higher acreage and for big supplies for new crop. As far as prices, we're still going to say very clearly this week might be kind of a mixed affair as far as trading, but as far as prices, still looking right now $3.92 for corn and soybeans. Certainly for the for the new crop, $9.75 is very reasonable once you throw in some extra acres as far as this goes. So we're still keeping a bearish hand on right now. We're not saying that this recent stoppage of the downtrend is going to change anything at all here as far as pricing. Yes?
There was a lot of question between the acreage we have this year versus the acreage we had a year ago, because pretty much the acreage they gave us in March is pretty much equal to what the final acreage number was last year after the preventive plan.
Yes.
What's your thought that some of those missing 7-8 million acres will show back up, or are they just gone? What's your best guess?
So Jim asked a question, how about all this acreage problem we had, number one, going back to the March reports? On the March reports, if you add up corn, soybeans, and wheat, there was only, in fact, it was less than a 1 million acre increase. How can you have only a 1 million acre increase when you got 7 million unplanted, plus we got CRP coming out, which is about 1.5 million? So theoretically, we have 8.5 million acres thrown in the mix here. No, I don't think that USDA is going to show us what we want to see as far as acreage. I do think that we are going to see an overall bigger acreage number, but we're not going to get 8, not going to get 6, maybe 3 of that back. The problem is actually, and we've looked at it, there's no good correlation between those preventive plant years and actually the next year's acreage increasing. Kind of a tough deal to make a guess on.
All right, Rich, thank you for that. So we're going to turn things over to Monica now, take a look at these charts and see what she's got to say. So go ahead, Monica.
Okay, we're looking at July corn here one more time. We had a large bar on the chart here today, and we closed well below Friday's low. So technically, that's not a good sign for the bulls here. You could say we're in a bit of a range right now. We've got this high here, 459 3/4, and the most recent support, 435.5. That's our most recent low here from the 17th. So you could try and trade this range right now. The fact that we went well above the 20-day moving average, this purple line here today, we rejected those higher levels and closed below Friday's low. That, to me, is still bearish. So that could be one of the first signals that we're maybe going to resume this downtrend sooner rather than later. If not, we really need to see a close above that 460 area very soon to kind of reverse that and, tell us that we might have a bottom forming here. If not, keep an eye on the 435.5. If we break that, we've got the next low here from quite a while ago. I believe this is December of last year, 421 3/4. So that could be in the works here if we do see another lower close tomorrow. And again, if we break 435.5. So if we do break that, that's probably a sell signal. I know we are kind of running out of time on the July contract, so let's jump over to the D's and see what we can do there instead. Looking at new crop here, kind of have the same formation, got a little bit of a new range going on here. The top of that range is near 460. This high right here is 458 3/4, so very similar to the July. And again, this yellow line here is the 20-day moving average. We went above that. We actually opened above it, couldn't stay there, and then we closed below Friday's low. So again, that's that to me is negative as far as chart signals go. We need to watch 435 on this chart here as well. That was the low here. And also this low here, 436 1/4. That's our most recent low. So that's the range here. Keep an eye on that. If we close below 435, you probably want to have some sell stops in there to get short because we're probably going to head much lower since that's the contract low. Jumping on over to beans. Looking at July one more time here. Still have a short-term downtrend on the chart. We've kind of been consolidating around 38%. And the 100-day moving average, that's the purple line here. That's kind of around this 1420 area. We closed above it today. However, unless we take out this downtrend here, we're probably going to head lower, and I'm not going to rule out a test of 50% or even 62%. Again, but we're running out of time on the July contract here too. So keep those 50% and 62 in the back of your head here. The most recent low, we've got 1393.5, so watch that for the rest of this week, especially if we cannot take out this this current downtrend. And last but not least, November beans. We are still working within our roughly our 40-cent range here. 1208.5 support, 1249 1/4 resistance. We did close above the 50-day moving average today. That's the blue line here. Did not close above Friday's high, so that's slightly disappointing, but we're still kind of approaching the top end of this range, and anytime we get up here, you know, 1240, 1249 in that area, I would probably be a seller unless we see a close or even two above the 1250 area. That's what it would take to convince me that we're going to continue to go higher and maybe, you know, test the 1280 area again. Until then, I would trade the range, you know, sell up here at 1240 and above. If it goes down to 1208, that could be some area to get out of your shorts or look to do test the long side here. This low here is our overall most recent low, 1201 1/4. So if we close below that, probably want to have some sell stops below that as well. We do have the 100-day that comes in here at 1197 3/4. So that'll be some support as well. But, I mean, we've been in this range for some time now. So if we take that out, you're probably going to want to be short. And that's all I've got.
All right, Monica, thank you very much. We'll turn things back over to Rich Nelson now. Let's take a look at livestock and see what he's got to say on that. So go ahead, Rich.
All right. Friday afternoon's cattle on feed report came in pretty much right on the average guess for all categories. For placements, numbers right there down 7% versus last year. As we said, that was expected, and that makes 3 months in a row of lower placements. So we've got no problem at all with saying that this fall-winter period is going to be a good one of tightening here. For this report by itself, May placements help determine October through January live cattle slaughter here. Now, it is not the only month that goes into each of those factors here, but it is something which does contribute to the October through December slaughter period. As far as the marketing numbers, this was almost right on the average guess as well, down about 4% versus last year. As a whole, this is actually pretty interesting as far as a marketing number. What do we have right here? This is the third. Let's see here. Yeah, in fact, second month in a row of actually hitting the average numbers, but from what should have been actually marketed. So only a 4% decline. We should have actually seen about a numbers even with last year. So we missed the target by about 4% because we still have this problem with cattle feeders holding back numbers. Roughly about 90,000 head right now. We're pushed over into June as far as market rated numbers. But as of this point, we still haven't turned the tide yet. As of numbers, we're very close to last year, down about 1.6% here as far as the cattle on feed here. More important for us right now, for the very short-term picture. We saw last week that cattle feeders had added 39,000 head to the show list. That doesn't mean that they were sold. That just means that they were thinking about offering those for sales to packers. This week's numbers just came out about an hour ago, about a 20,000 head decline versus last week. These guys said, you know what, we saw how aggressive packers came after our numbers. We're going to just dribble out whatever we can here for the very short term. So for this week as well, and probably next week as well on top of that, we should expect tight supplies being offered to packers and steady prices on cash, maybe a little higher as well. So we cannot say we're near a top on this cattle market here just yet. This afternoon, in fact, just a few minutes from now, 2 p.m., we've got the cold storage report. This one we expect 378 million pounds of beef, and that would be down 22% from last year at the same time. Now, beef stocks or I should say meat stocks, they're not like grain stocks in the exact same way. It doesn't mean we've got a 22% decline of amount of beef available. We use storage for a little bit different purposes here on the meat side. But it just says, hey, we've still got a very tight supply of beef. One thing I did want to look at as far as on the hogs here, as far as cattle goes, we don't expect any major break right now in the very short term. As I said, another week or two of higher trade. Maybe we'll start to see a change in marketing patterns next month here. As far as the hogs, I just want to look at the commitment of traders numbers. If we look at this red section right here, these are all the numbers as far as the trading funds, the managed money group. And it's really interesting to see that we've got a little uptrend rebuilding here in the hogs without fund participation here. So this is as far as weeks of selling from the funds, 1, 2, 3, 4, 5, 6, 7. Let me count that again. 3, 4, 5, 6, 7, 8. So funds have been selling hogs for 8 weeks in a row. So we still like the idea of saying, hey, we're going to hit 130 in the August, which is where they're already at. But we don't have the firepower from funds backing this one up here. So we still like the idea of saying, hey, we're going to have tight supplies here starting in the second week of July. We're still going to have PED issues and that bit. But it might be just an issue where cash hogs rise up to meet futures. I don't know if going straight outright long futures is a good bet here. But as far as the cold storage report, numbers we expect here for this afternoon, 551 million bushels, and that'd be down 16% from last year. Now, we're already at this very low level from last month. As you see, we've got that big difference versus last year, so this is not a major change by itself for this month. So I'm just pointing out this is not new information, at least on the pork end. We'll also be looking at chicken stocks. We'll have some commentary on that here, wrapping up tonight. So as far as a whole, cattle, another week or two of mixed to higher trade. And as far as pork, looking for cash to rise up in meat futures.
All right, Rich. Thank you for your help today, as well as Monica. A lot of interesting trade coming up. Big report in about a week. So feel free, give us a call over here if you guys have any questions at all. You can reach us 800-262-7538 or check us out on the web at allendale-inc.com. Hope you guys have a great day, have a great rest of the week, and we will talk to you again next Monday. Take care.